Welcome to Thought Leaders, featuring interviews with some of the best minds in the industry. Today's special guest is industry veteran and hybrid product expert, Butch Boley. Hello everyone, I'm Steve Savant, syndicated financial columnist and talk show host. In this segment, Butch and I are talking about how to purchase hybrid long-term care policies with an annuity. We'll talk about the advantages and disadvantages of this type of product. Well, there are some really great advantages, I have to say. There are a few pullbacks, but I say forget those. The advantages totally outweigh them. When we're talking about an annuity product, most people understand that, I like it because it's tax deferred. It may be an index product. It may be a fixed interest. It could be a variable product for all I know.
That's correct.
But when we're talking about annuities, we've gotten special treatment under the PPA. This new Protection Act, that tax issue is really a big deal.
Yeah, it is. Who likes to pay Uncle Sam? So
I don't.
If you have the opportunity not to, why not?
Okay, so let's just make sure we get the rules of engagement. I have a deferred annuity that has accumulated gain. I could transfer it tax-free on a 1035 exchange to an annuity that accommodates this LTC provision.
Correct.
When I go ahead and make withdrawals of my gain out, which is usually LIFO, I'm not going to get taxed because it's going directly for my reimbursement, or in some cases, maybe even indemnification. But it's going directly for my medical long-term care expenses.
That's correct.
Okay, so this is a great deal because I had this money accumulating tax deferred. Now I get to take it out tax-free.
Correct.
All right, so that's the tax play, okay? If I have a new contract with no old money and I put that in the contract and it starts to accumulate gain, can I do the same thing by pulling it out again?
Correct.
Okay, so just remember, it has to be a qualified annuity long-term care event, and that's what we're looking for. Well, let's talk about some of this because long-term care rider. Now, some of these riders, you use this all the time. Tell me about what does a rider do when I put this on top of it?
It allows you to take your single deposit and increase it 2 to 3 times. From what I've understood, and I've actually talked to some long-term care experts, the cost of these riders are very, very affordable compared to the premiums on long-term care.
Now, the benefits aren't going to be as big as a standalone contract.
Correct.
This is kind of to mitigate this issue.
Correct.
So I already want to save anyways. I'm a client, and I'm already saving an annuity because I don't want to pay taxes. It's my non-qualified monies. So I have non-qualified annuity. I do this. Now, we talked about the taxability of the issues. Talk a little bit about the benefit triggers.
Yeah. More and more popular, becoming 2 of 6 activities of daily living triggered. You're typically going to have 90, 120, maybe 180-day waiting period. But as soon as you get a letter from your doctor saying you are deficient in 2 of 6 ADLs, then you can reap the benefits from it.
Okay, so in the meantime, I'm waiting for my elimination period to expire. Mm-hmm. I already have this online. I know exactly what my benefits are going to be. And what's one of the best provisions? I mean, if I don't use it, I don't lose it.
That's correct.
Now, I'm still paying morbidity costs inside the contract. It isn't like I'm getting for free.
That's correct.
But I at least have the ability to have this piece of my asset that if I don't use it, I don't lose it.
Correct.
All right, talk about the deferral period. Most of these are paying a contract for a specific amount of years.
Yeah.
So tell me about how it works on an annuity.
Well, typically you're going to have to wait 2 to potentially as long as 4 years before you can actually exercise the benefits.
Okay, so I can't just buy it knowing that I have a problem.
That's correct.
Okay, so most of them have 2. Is the minimum 2?
Typically 2 to 3 years.
Okay, so I'm buying this knowing in the future, not in the imminent future.
Correct.
That's what I just heard you say. Elimination period we talked about. Now let's walk through this a little bit. Give me the kind of the benefit period, the leverage factor, the maximum LTC benefit, and then the monthly max.
Yeah. So for example, you put in your $25,000. Your benefit period could be 2 years. They're going to take that $25,000. They're going to double it to $50,000. Then your monthly maximum you can take out is just a little bit over $2,000.
Well, but this is really now an asset, a hard money asset now, because the annuity already is. Now we have a feature knowing that the odds are high that we're going to have some kind of an LTC event if we live to expected mortality.
Correct.
So this could be this doubling. I notice here this one you have a tripling factor.
Correct. You have a tripling factor, potentially as much as a 4-year payout on that. I believe some statistics show you're in average stay in the nursing facility is about 860 some days. So having this number of years payout to as long as 4 years with potentially as much as a tripling factor, can really definitely help you. And you'll see here on the last one, up to $6,200 a month.
Now, from annuity, LTC linked benefits, from one annuity to another, a lot of differences in the definitions and the writers on this?
Correct.
So it's not just the money leverage I got to look at. I have to look at the actual language of the contract.
Correct.
How tedious is that?
It can be pretty tedious. Insurance companies, the policy language can get a little technical, a little bit hard to decipher. So when they talk about home health care, what does that mean? Who can provide the care? When you're talking about a skilled facility, what care, what level of skill is provided within the facility?
Now, in my contracts, they in the old standalone contracts, they allow you to either choose indemnification or reimbursement. But in these linked annuities, have you seen any indemnification?
No, it's all reimbursement.
So it's all reimbursement.
Correct.
So you have to submit your expenses, your bills on a monthly basis to get reimbursed.
That's correct.
So that's one critical key area to that. Okay, and then from another factor, what about the effect of inflation on these kind of annuity contracts?
Yeah, I think medical care costs, we all know they're going to be going up. That only trickles down to the long-term care industry as well. So I think some sort of inflation protection, which does add to the cost of it, is definitely worth it.
Well, for more information on the material presented on today's show, just click on the landing page address in the video description. And for more information on all our shows, seminars, and workshops, just follow us out on social media or visit us out on our website. I'm Steve Savant. We'll see you next time on Thought Leaders. And remember, keep thinking outside the box.
A solid web presence has never been more important to the success of your business. Introducing Agent Website Creator, provided by CreativeOne. Through Agent Website Creator, you can create your own personalized website and have it up and running easily with zero knowledge of programming. Choose from several designs with easy drag and drop customization. Get proven lead generation offers, professionally written articles, and helpful financial calculators. Plus, the ability to embed videos, integrate your social media, and more. Update your website anytime and show the world within minutes. The best part? It's hosted for free. To learn more about Agent Website Creator, call your CreativeOne sales team at 800-992-2642 or visit us online at creativeone.com.